Afternoon, everyone. Welcome to this Chartered Banker webinar on the next frontier of focus on fraud. Thank you for joining us. My name is Aaron Chauhan. I'm a solicitor. I deal with financial crime, compliance and litigation advice arising from fraud. I'm also a trustee of the Fraud Advisory Panel, and it's my pleasure to be chairing this event today. We're going to be looking at a variety of issues facing the banking sector. We are going to look at the good work banks are doing around compliance and detecting fraud and financial crime, but trying to see where the world is moving with terms of customer expectations and different types of fraud. We're going to look at that current fraud landscape, as well as trying to look at what other areas banks can maybe be working towards on collaboration, be it with the public sector or government bodies. I'm pleased to have an excellent panel of individuals with us. I'm going to just do the round to ask them to introduce themselves before we move on to some subjects for discussion. So, Jonathan, may I start with you? Just give a little introduction about yourself, please.
Thank you very much. I'm a barrister in practice in London, and I specialise in corporate crime and financial crime cases, sometimes involving civil actions, but mostly criminal. I'm also a visiting professor in practice at the London School of Economics. I became Queen's Counsel in 2003, and my practice today really does tend to focus on issues such as money laundering, fraud, bribery and corruption.
Thanks, Jonathan. Jake, could I turn to you next?
Sure. Hello, everybody, and welcome. I'm Jake Plenderleith. I'm the editorial manager for the International Compliance Association, which is the world's leading professional body for global regulatory and financial crime compliance, and I'm a former journalist.
Mark, pick you out next.
Hi there. I'm a partner at RSM Restructuring in London. I'm an insolvency practitioner, so I deal with the, if you call it, the sharp end of when fraud's actually been perpetrated in dealing with actually trying to pick up the pieces and try and recover money from the fraudsters. I mean, so as I said, insolvency practitioner, so generally speaking, I'm working in contrast to Jonathan in the civil arena, although I do cross over into the criminal arena where I'm acting as a confiscation matters post a criminal action, so recovering assets from the criminals once they're convicted.
Great, thanks, Mark. And Alex, welcome.
Good afternoon, everyone. Alex Suck. I'm a managing director with Moody's. In my role is specifically around developing products, data, and technology that allows our clients to prevent the criminal infiltration of the world's financial markets and supply chains. We do that through development of data assets that allow our customers to better know their customers and know their suppliers to prevent fraud and other types of financial crime.
Thank you, Alex. Well, as I say, we've got a really insightful and knowledgeable panel here today. Our plan is to look at 4 areas around the current fraud landscape, and we'll all comment and discuss those. And then we'll talk about 3 areas on collaboration. So I'm going to start with an area I get to talk about a little bit, which is the landscape of duties owed by banks to their customers to help them protect from a fraudulent event, and considering whether there should be more codification of those duties. At the moment, it's not maybe quite clear where their obligations lie. There is a British Standards Institute protocol about banks protecting customers from financial crime and harm, especially vulnerable customers. But I'm interested to know from the panel how far codification and a duty of care to customers should go for banks in detecting and helping their customers avoid financial crime or fraud. Jonathan, is this something you may be able to enlighten or comment on?
Yes, no, certainly. I mean, it's a very interesting discussion. I think there is quite a strong case, frankly, for codification of the duties. I say that because I think there's a bit of an expectation gap between the customer community on the one hand and the banking community on another. The banking community, I mean, understandably, but will say that at the end of the day, it's for the customer to handle his or her own affairs, and that they can't be expected to insure against fraudulent conduct and the customer becoming a victim. And that would put an unreasonable burden on on the customer base in general, because it filters through in the form of charges. The other side of that is that customers look sometimes askance at situations where the banks have not picked up what appear to be irregularities on the face of their dealings with the clients, and have not acted at all to protect them. So the law is not, it's not terribly helpful from the customer's perspective. So I suppose when we talk about codification will be good in itself, because it would clarify the respective interests and respective responsibilities. But actually within that, there is a question as to whether the codification should be a true codification, or whether we should be looking at a tweaking to maybe alter the balance and tilting slightly more in favor of the customer rather than the bank. Yes, all in all, a good idea.
Thanks, Jonathan. Alex, could I just turn to you, because I'm interested to know if there is a tweaking or more, as Jonathan referenced, to codification of duties. In practical terms, how difficult is that going to be from a tech perspective to identify when a customer is about to be defrauded and having to engage them to stop that?
Yeah. So I think Jonathan's completely right. Codification would certainly help and be prescriptive and maybe in terms of those requirements. However, I would tell you that this is actually we're working with many of our clients in the financial institutions who understand this is actually good business, and to be on the front foot of preventing this type of fraud means that reputational risk, for example, is something that you're being proactive in dealing with. How would you do that? Certainly, I think there are ways and means to do that today. I would argue that a very strong onboarding program and continuous monitoring is something that's incredibly helpful. That should be done while preserving a frictionless onboarding experience for customers who wouldn't be fraudulent, but things like adverse media, negative news, knowing who has been a previous bad actor is very indicative of those requirements. Things like the 6 money laundering directive out of the EU are prescriptive in terms of what are those types of items that one should be looking for, that a firm should be looking for in terms of onboarding. I would argue that technology tools are in place today. They're improving as artificial intelligence is learning how to better screen and be precise in terms of that experience. So I think those are just a couple of key issues of one, being the front gate, being that onboarding experience and understanding who your customer base is, and then the continuous onboarding as things change, as we know that rapidly happens, understanding the relationship is going to help the broader customer base population.
Thanks, Alex. What I'm keen to find then, if we're talking about the monitoring, the ongoing monitoring of customer relationship, and I thought the point you made about adverse media was pretty interesting, and looking at that kind of wider area of diligence on onboarding. We've got maybe two perspectives here. We've got Jake maybe working with many compliance professionals, and we've got Mark looking at it from a victim perspective. So if I ask Jake first, and I'll go to Mark, so we can get the counterbalance of from the internal compliance perspective, how onerous do you feel that would be, Jake, that banks would ask to do more about looking into their customers and ongoing monitoring of maybe adverse media, for example?
I think it would be fairly onerous, given the pressures and responsibilities that are already placed on compliance teams. They have a great deal of responsibility and duties already. When you talk to people in compliance, one of the tricky things, or one of the things that they raise quite often is the sheer amount of things they're asked to do and the difficulty of actually achieving those things that they're asked to do. So I think it would be fairly onerous. Well, going back to the codification, I do think it would be a welcome benefit, because greater clarity, I think, from a compliance perspective is ideal. Compliance is there to maintain confidence in the firm and protect it, but also protect customers, and clarity is really important when it comes to achieving those aims. So whilst compliance does have a number of responsibilities and more responsibilities on top of that, would probably not be welcome. If there was clarity around them, I think that would be a benefit, and it wouldn't make it quite so onerous.
That's helpful, Jake. And Mark, that talk of clarity, I guess that would be welcome for the customer side of the discussion. Yeah, I mean, I thought I've got this almost from painful experience from speaking to people who've been defrauded, not necessarily directly via banks or anything like that in terms of push, pull through or whatever, but when you're speaking to somebody who is relatively sometimes business savvy. So, I mean, often there's the assumption that somebody's been duped is foolish, obviously foolish or even stupid, but actually these are people often who are actually being, best way to describe it, chasing the return, which is not outrageous in many ways. You know, I remember from the days of the 80s and 90s that if you're getting 7 or 8% on your money, you wouldn't be getting too excited about that. But that's the sort of returns sometimes people are being offered now. So you have got relatively intelligent people, but I think there's a piece here as being part of the general front line in defending fraud, because there's a number of different people involved, and the banks have got to realise that they are one of the very important parts of that. So I think we do actually have to be mindful of what more can be done to protect victims. I think expanding one of Alex's points he just made is that when you're talking about codification, you've also got some institutions that are probably not as good as others, and the fraudster is going to identify those institutions. So once the fraudster identifies those institutions, straight away that's a competitive advantage, if you like, for the people who do it properly, because you can leverage off that in terms of all sorts of customer confidence. So yes, there is a lot of, if you like, responsibilities and extra back office requirement needed, but also there can be turned into a bit of a positive actually in terms of actually how we can make our bank more attractive to customers. Yeah, that's a good point, because it can be a sales point. I think it may be TSB, and they've done almost like a fraud guarantee now, which is beyond some of the codes or expectations in the marketplace. One of the evolving areas we've seen a lot of litigation around is this so-called quint care duty of care of banks owed to customers, and it started to expand through a case called Singularis. Jonathan will probably be able to talk about this a little bit more. And now the scope's been narrowed. There was a case, I think all of us on the panel will be aware about, of Barclays and Phillips, and the judge in that court said, well, no, the bank's on a duty to look out for internal fraud, so an internal employee of a customer committing fraud on the corporate customer itself, and the bank's not under a duty to look at external bad actors causing loss. So the quint care duty didn't extend to looking at external bad actors. There was a case in Scotland in the last month called Seckers Fabrics, which versus Clydesdale, and that reinforced the message. So it looks like the quint care duty is now retracting again. Jonathan, I'm going to ask you first. This duty to, which may fit hand in glove with getting codification of duties, but this quint care duty, do you think it's now getting to what it should be? It's really just looking for internal fraud, or is that too narrow?
No, I mean, I think your analysis is correct, that the courts have definitely played around with the concept a little bit, and then have retracted from the notion of holding the banks liable. It's holding the banks liable in circumstances where they have in some way assisted by their conduct in some sort of handling of fraudulent proceeds, or indeed in the commission of a fraudulent act. And the courts have really spent a lot of time focusing on the ingredients of dishonesty here. At what point does a bank become dishonest in its failure to spot some sort of irregularity? And the sort of classic scenario would be where it just had not appreciated or had turned a blind eye to something that was going wrong. And we've seen some interesting cases involving some of the kleptomaniacs who have taken money from the East European states and then bankrolled it through the Western banks, and whether the banks should have realized what was going on and whether they should be held responsible. And the courts have broadly shied away from imposing that sort of responsibility. The question really is whether they're right to do so. because a statement of the law is one thing, a statement of what the law should be is another. And I suppose this, to some extent depends on how you look at things. I mean, it's back to the matters I was mentioning before about policy insurance and that sort of thing, and who's going to bear the cost. But I mean, I do think there is a case, speaking on, you know, for a hard-pressed customer, for the customer to be able to obtain some relief, where a bank has actually just simply turned a blind eye or failed to pick up some sort of irregularity, particularly in a Ponzi fraud type scenario. It's the Ponzi fraud type scenarios that are the most painful, where a customer has been defrauded and the fraudster hasn't picked up that it actually is banking a fraudster. I mean, those are tough cases. I think that the traditional view is, well, you know, at the end of the day, the loss has got to be borne where it falls. But I don't know, in today's world, where, you know, there are these duties, strong CDD duties, I think there is an argument to be developed that, you know, I mean, unless they're given some teeth, and unless there are some repercussions and consequences that follow for a bank that doesn't do its CDD properly, doesn't pick up that it's acting for a Ponzi fraud, that there will be some cases, the egregious cases, where I think it may be that it's not unfair for a customer to look towards a bank in that situation. But I do appreciate the point, and I'm sure that it will be made very swiftly, that the banks are not insurers, and we have to remember that too.
That's helpful. Thank you, Jonathan. Mark, do you want to add anything from the customer's perspective to what Jonathan said there?
Yeah, as Jonathan was speaking, it was occurring to me that I understand if you set up an account and the KYC, etc., is done appropriately and the account is it is the ongoing monitoring and that intel that you get from actually being the recipient, being actually the banker to the fraudster, is because you will start seeing those transactions, and it's that ability to flag those transactions coming through, which tend to be large sums of money, relatively large sums of money. They tend to come in quite quickly as well. It's sort of, you know, there's almost like a window of opportunity for these guys before they get found out. And of course, in having had the pleasure, unfortunately, of dealing with some Ponzi schemes, they can't sustain forever. So accordingly, they will have a short shelf life. So you'll suddenly see a customer change. And it's really about that understanding your customer. And it's not being able to pick up those changes in the customer's activity levels and trying to be able to understand that. That would be a tremendous help in actually stopping these people.
Thanks, Mark. Alex, from our discussions previously, I think my understanding is that the tools are being deployed, the tools are available for analytics and picking up some of those concerns. For example, Jonathan and Mark have flagged that, you know, a bank should spot a Ponzi scheme in operation by one of their customers. There are positive tools out there that are working to help in this area. What's your view? Do you think banks are actually doing more than people realize?
I know they are. I know absolutely that they are. I mean, you know, we talk about the specific case. I think enforcement is actually an enforcement of not having the correct customer due diligence processes is a real threat, and it's been at least a 20-year journey for many financial institutions broadly to put those controls in place. Now, certainly each individual institution, while trying to be compliant, is trying to meet those requirements, and not everyone. It's not a standard across the entire industry. There's too much variation, but every day there is new technology and new ways to try to address a very significant pain point. So I agree. As Jake makes a great point. There's not that many more hours in the day to do that many more tasks in order to make sure that these compliance processes will meet every letter of the law. And as soon as you do them, the network of fraudsters and money launderers are smart, and they'll change and they'll adapt. And so it's really looking towards the future of how are decisions being incorporated into things like supervised machine learning that allows a quick and rapid automation of low-level tasks, so that some of the harder decisions, more of the gray area where a compliance officer really needs to become involved and understand the facts, that they can move swiftly in order to make an actionable decision. It's a mound. We've never had more data around our customer, as we correctly pointed out, but all of that data, it needs to be distilled into an actionable decision. And that's still the ultimate goal, right? That's not, that is the North Star, not complete for everyone. But there's partnerships across certainly the financial institutions working with each other, with governments and outside parties that are really working to try to make that North Star a reality, turning that data into insight so that quick decisions can be made, especially in these grayish areas.
That's helpful. Jake, please comment on anything your fellow panelists have said, but I'm also intrigued from your perspective about when we talk about spotting, your own customers' involvement in a Ponzi scheme, and the hours in the day and the hours to keep educating yourself as well as dealing with the regulatory compliance. What's your take on all of that? Is this just beyond feasible, or is it?
Well, I think Alex just made a really good point about automation and using that to free up hours in the day. What you see in compliance now is critical thinking encouraged around assessing information. So you already have the ongoing monitoring, due diligence, and KYC, which are really important. But if you can use technology to do some of the more manual tasks, and then you apply almost like a detective, and you're encouraged to analyze information, and you receive training and awareness on how to do that, that makes the compliance's job a lot easier and a lot more effective. It's a very tricky one because it's the perennial question of responsibility. When it comes to automation, it's where technology can be useful in actually freeing up time to apply analysis to try and spot fraud. But it's very tricky because compliance cannot and won't be able to protect and spot everything. But if you can apply technology to help you make better decisions and to enhance ongoing monitoring, which we have actually seen, they've done very well in that respect, then I think there is definitely scope for improvement there.
It's hopeful because I think technology will continue to drive this detection, and I think it always comes back to that human element of what we feed into the technology to help it do the job we need it to do. Another area where customers are getting a lot of, I suppose, publicity in relation to being victims of fraud is this area of authorized push payment fraud, and it's often in the news. The CRM code, the contingent reimbursement model, came out about just over 2 years ago, I think now, and we're seeing a different type of approach from the 7-8 signatories to that code by different banks to how they're applying the code. Mark, have you had much experience of victims through authorized push payment fraud? Have you seen a consistent approach of banks, or what's your take on that so far?
Well, I suppose the issue from my point of view is that I don't actually get to see very much of this in many ways, because for a fraud investigation to really take off, you need a certain size of fraud to work, really, from that point of view. And inevitably, I'm almost looking at reverse. It's not so much how much has been defrauded. I regard them as the target, the fraudster. What assets can I identify in which jurisdictions as to whether that's worth opening an investigation to recover, because it's all very much about a civil recovery. So then it goes back to, these are for the individual significant sums of money, but on their own aren't going to trigger an action fraud investigation of some sort. So it all then becomes about the ability to link all these transactions together to actually then take it further forward quickly.
I think one of the things that there's another area that links into this, is about a part of the defense position on a authorized push payment fraud. So under the code, banks will say, look, if we've given enough education to our customer, and they've acted in a manner which is, I think it's phrased as grossly negligent, we won't refund a customer. And so when we're looking at, the good work banks are doing, do you think that they should, with all their, the time constraints as well, what about the fraud awareness education they give to their customers? Is it a one-size-fits-all, or should they be training or giving education in a different way to different demographics? And the reason I say that is recently there was an article about child trust funds that, the
Yes.
relic of the Labour government, and they are all coming to fruition now. Those children are turning 18. They're coming into £1,500, and 55,000 children turn that age every year. And they're being targeted by criminals for, posing as the landlord to get their rent or something.
Yeah.
I'd like to understand what people think banks could do or should do about different demographics and educating them about looking after themselves. Jake?
Well, I think this is really important and interesting. I think I did actually see the article you're referring to. I don't think the one-size-fits-all approach is sensible in a lot of cases. And I think what was really interesting about the last year of the pandemic, you would imagine at the start that it would have been perhaps an older demographic that would have been more vulnerable, people used to face-to-face meetings and banking. And then this week you have in the UK a lot of students going off to university, and the awareness around fraud among young adults is almost completely not there. And there was one initiative mentioned which was about going on to their social media platforms and addressing them on the areas of the internet where they are, because the opportunity for criminals there is enormous. So I think there's definitely room for financial institutions and banks to kind of address that issue in terms of looking at different demographics.
Okay, Jonathan, I've got a kind of legal point on this, which is when a judge sits there and addresses whether an individual has acted negligently in terms of their own management of their banking, does the law discriminate, or is it indiscriminate in relation to the age of that individual customer who's operating the banking? So the customer's 21, will the court be more lenient upon them to a customer who's 45, for example?
Well, I don't think so. I mean, historically, the common law has always taken the view that you've got to look at each individual's position really as an objective standard. And so I don't think subjective characteristics are going to come into the equation. That's the general rule. So I don't really see much scope for looking for a judicial solution here. I can see why the banks would perceive it as being very much in their own interests to deliver an educative function across the demographic of its customers. Plainly, at the end of the day, if the bank is at risk of being held responsible for any misdemeanors that may have happened, the last thing it will want to do is to pay out for them. So educating its customer base to reach a higher level so that they're not as susceptible or vulnerable is certainly, I would have thought, very sensible as an additional function. I mean, it's outside of the typical banking function, but they have a plain interest in doing that. How they do it, I mean, I quite see the distinction between individual customers and business customers. Once we drill down further, I think the bank has to be a little careful that it doesn't play to stereotypes or get into discriminatory practices by suggesting that one particular form of vulnerability is more susceptible to a particular fraud than others. But yes, I mean, I certainly see the scope for banks delivering this sort of and achieving this sort of outcome. I would have thought a better and more knowledgeable customer base is in everybody's interests.
Thanks, Jonathan. Alex, could I just ask, you talked about increased automation, and I suppose when you're looking at ongoing monitoring of customers, that I presume can always be tweaked depending on the demographic of the customer or the customer type. So you could have enhanced ongoing due diligence because a certain customer type is deemed more vulnerable, for example? Is that feasible, or is that even happening at the moment?
It is, and the most advanced programs, I use kind of a tongue-in-cheek analogy, oftentimes looking for fraudsters or this type of behavior is like trying to find a needle in the haystack. So why wouldn't you just take the haystack and make it into a lot smaller piles and then go analyze those smaller piles? And with proper technology and algorithmic scoring, you can do that with external data first before you jump into the work, and that's certainly very important in terms of addressing a risk appetite. Now, there's various factors that go into that. Of course, looking at your customer base, understanding the products in which you're selling, and I would want to emphasize that this type of approach and this type of screening, while we're talking about a financial institution, namely banks, doing this, we have to be acknowledged that financial services are now components of almost every brand. As you think about it, every technology brand now is offering some form of financial services where fraud could be there, and that's maybe where my money is and how I'm interacting with others. Payments through gaming, for example. So it is a really broad landscape where the banking industry, through the proper customer segmentation, is probably showing a lot of what can be done in terms of those practices. But now those practices really need to be democratized across the entire financial network in order to be effective. As we mentioned, fraudsters will always look for the weakest point, and whether that is through e-commerce, whether that is through gaming, whether that is through gambling payments or traditional banking, proper segmentation is going to take the mountain of work that needs to be done and allow us to focus on where our attention could be. At least it's an attempt, right? And so what we see as a result is we're probably not catching everything, and that's going to be understood. That is of course our goal. But the good work that proper segmentation, analytics, and automated data, not spending the time to collect the information and do those manual processes, actually give us hope to being as advanced as some of these financial networks and organized crimes that are trying to attack our financial networks.
Yeah. Okay. So, it's feasible that we could move to that environment where that
absolutely
customer segmentation can be identified for the risks. I think, trying to keep to time, we've got the other area to discuss today is about collaboration and information sharing. And Mark, when we caught up, this is probably no secret, the panelists catch up before these events just to make sure that we're all ready to go. You gave an example, I think, about HMRC and other areas where financial crime data is shared. I'm just wondering what you've seen maybe outside of banking about information sharing to help disrupt the criminals.
Well, I suppose I work in conjunction with several different government departments. There is always, within that good working together, a certain constraint. And I'll take in relation to revenue and customs, it's taxpayer confidentiality. But it does illustrate to me when you actually start working with some of these departments, they've got actually some very strong quality investigators, and they have a plethora of information which assists in fighting financial crime. But in practice, I often get these situations when I get competing departments almost in some ways. I'm there trying to recover money for the creditors. So if you like, my responsibility is to the creditors of the company. So I'm their representative. And then I might get a dynamic from, say, one of the, say someone like the Serious Fraud Office who may be looking to take a prosecution. I may have got then the revenue talking about tax claim and maybe a civil recovery there against the directors. And we're all zoning in on the same target, but not as joined up as perhaps we could be. And I think that is the challenge. There's a challenge of obviously confidentiality and obviously GDPR, etc. But you can see that we've got to, if we are going to beat the fraudsters, we're never going to beat the fraudsters, but have a chance of catching up a bit with the fraudsters. The ability to share information efficiently and quickly is fundamental to that. For me, I've got routes to do it, but my route is rather slow. It's going through the courts with the help of someone like Jonathan to compel parties to give me information. That takes time, to be honest. And at the moment, the court's been busy. It takes months. So in my perfect world, or less than perfect world, I would love to see these organizations working a lot more closely together.
Yeah, I think that is the ideal world, is that there is an open way to share, but that confidentiality comes into. What are the good news stories, Alex, Jake, from the banking sector you're seeing about information sharing and disrupting financial crime?
Well, if you take the UK banking protocol, I think that's a very good example of very effective collaboration. It was also expanded to include call centers and online banking. It's like a rapid response initiative. I think that's a fantastic development, and the figures that have been released this week on how much money has been prevented going to fraudsters is very welcome.
Thanks. And
I would say I've seen an evolution that's incredibly positive. Banking and even the broader fintech ecosystem, right? So I think as ever, we think about how those things are connecting. Literally, how I've seen that happen is professionals getting together and whether they're meeting in rooms and talking about emerging typologies of criminal behavior, sharing that type of information of how schemes were working, so that pattern recognition of these professionals can be shared amongst the community. I think that's the first step, and that was very positive in terms of creating a stronger network to kind of study the typologies. But that's now advancing. So as we think about, how do we syndicate the meeting at the pub, so to speak, and people sharing of those ideas, and to how do we kind of think about technology applying the next way that happens. And I look to things like federated information sharing consortiums, and even, if I so to say, homographic encryption that can securely share the answers, share the required information without sharing too much of the inputs of the data, breaching GDPR, for example. I tend to be the believer that says that benefit far outweighs our smaller concerns about elements of privacy. And so that benefit in terms of doing it the right way, doing it safely, doing it on the back of automation, it being the future, will outweigh some of the questions that have already started to erode, given the fact that this is such an important aspect to tackle in terms of competing with these fraudsters.
And the value of that information sharing, I know with the litigation work I've dealt with, or investigations, and Mark's the shame, he's talked about that, the value of third-party knowledge, essentially helping the court work out what really was happening, what was the true state of affairs. Jonathan, I suppose you've seen that time and time again in practice, that it's the third-party information that really unravels the case.
I have to say I'm troubled about the direction of travel. I mean, the direction of travel is very clear, that the government authorities, the public sector, is recruiting assistance from the private sector, really in many respects conscripting through statutory requirements their cooperation. And I quite see how, as an absolute, the reduction of financial crime is a good thing. And I quite see how the private sector should endeavour to achieve that and contribute to that. Whether or not the private sector should be collaborating in the way that they are, I think begs a number of questions. I noticed the word that's used is collaboration. I'd be much happier if it was cooperation, because that suggests something less formal. I think it's worth thinking about exactly what roles and responsibilities each agency, private sector agencies and public sector agencies, have. So I don't think the private sector agencies really do have an obligation to collaborate in that sense. And how far is that obligation going to go? So I do worry about that. I worry a little bit about the potential conflicts that are arising due to that collaboration. So if there is a cozy arrangement developing, a relationship developing between private sector agents such as the banks and the government authorities, quite where that leads. I mean, I can actually see how the public sector agencies can end up being compromised in that way if they're not careful. In terms of the flow of information, I'm far from convinced that we've got all the statutory gateways in place. I mean, I've certainly come across situations where data is shared, and it's shared informally, and actually there's no gateway for it to be done in that way. And the reason it's being done that way is for the reason Mark's alluded to, that it takes months to go down the formal route. But at the end of the day, are we going to be a society governed, a commercial environment governed by the rule of law, or aren't we? I think we've got to be careful. There are privacy concerns that have already been mentioned, and I think there's also the concern that you do see that something gets onto a database which actually is inaccurate, and it can spin around every government agency before you blink, and it's actually not right. So I think we've got to be careful in the way we handle this. So I'm not saying that I'm hostile to cooperation. I'm plainly not. I think that the public sector should cooperate very seriously and significantly with the public sector. I am, however, suggesting or just making a comment that we have to be a little bit careful, and at the very least, we have to have all our legal ducks in a row in terms of gateways, and I'm far from convinced that's the case.
It's really valid, and I think from the compliance professional's perspective, Jake, naturally we've got to ensure that those gateways, that the route to share information is there. From those you deal with in the ICA, do you get that impression that they want to share more, but they're very conscious about the restrictions upon them?
Absolutely. I think the will is definitely there. I think people can see the benefits of it, certainly in compliance. But as you say, there is a hesitancy and a reluctancy, specifically around data protection and data privacy. Compliance is all about focusing on protecting the firm and protecting the customers, and it's always that balance that has to be struck. So it's a tricky one, but it's not impossible. I thought Jonathan's point about cooperation instead of collaboration was quite interesting, actually, in terms of how you frame sharing of information.
Having a framework where you can just share that data.
Yeah.
So Alex, you did that too.
Just quickly, just the idea here is, I think two great points. Jonathan brings the topic where this is a really big subject and probably too big to consume all at once. However, the will to collaborate is there, and it needs to be balanced. So let's look at examples where it's not balanced. Let's look at examples around human trafficking and exploitation of forced labor, and detailed criminal networks that are exploiting those specific areas. Let's try it there. Let's make sure that as we test that model in small amounts for specific purposes, we evaluate to make sure that we're doing it correctly before we're doing it full bore. And then if we kind of look at those smaller examples and say, well, let's expand from that proof of concept, from that pilot, from that collaboration, then we know that we can do it in this format to kind of target something that's broader and probably, certainly outweighs a smaller privacy concern. But I agree, we don't need to tackle it all at once, but let's get started. Let's take the intent we have. Let's take the relaxation of some of the restrictions and some of the proceedings around enforcement in the U.S. Recent opinions from FinCEN said that they are supportive of this type of sharing done in the right way. But again, the right way is not always clearly defined. So I think it's going to be up to testing and proving, this is the engineer in me, to see that we can actually do it in the right way. And I think that's the example and that's the opportunity, rather than staring at the broader problem and saying we'll never be able to do it because it just looks too hard.
Yeah, okay, I get that. I think that's useful. We're going to have some question and answers shortly. I'm going to ask Mark I'm going to finish with one question to Mark, so I'll keep him on tenterhooks. And then I've got a few questions that have come in. I'll ask the panel about those. So please, if you've got any other questions and you're out there and you are eager to ask anyone on the panel, please do send them over on the chat. Mark, I suppose my question was going to be, I think the difference between private sector and public sector, if there were gateways to talk, is that technology, you have some organizations with legacy systems which won't talk to maybe more modern systems. I just wanted to really re-emphasize to the audience the power of information sharing for investigations and how that's helped from maybe the insolvency side you've looked at, and where you have seen it does make the difference, and why we should really be using this to disrupt more financial crime.
I think the collaboration point is, and cooperation point is important, because when you're conducting a fraud investigation, you often get hit with a lot of information at the start, and you review it and you start on your courses of investigation to take the inquiry further. And at that initial stage, you might not realize the relevance of a certain bit of information you've looked at. And what I found, and I'm thinking of a very specific example at the moment, where, and again, open up a gateways. I've had to go through several gateways, not just in the UK on this particular case, but overseas, to ensure I get information provided to me from overseas banks in particular, but also overseas agents who are dealing with offshore companies. And that little piece of information, I can go back to 1 or 2 little pieces of information passed to me from one particular bank following a court application. So a piece of information given to me through that process. On its own, the bank wouldn't have realized there was anything untoward. There's no question about it, no criticism of the bank point of view. But suddenly that piece of the jigsaw, when I put it with everything else that I'd got previously, which wasn't particularly exciting at the start, and often you have to do this on an investigation, go back to what you had at the start and review it, because actually you've got more knowledge built up. All of a sudden, that piece to me, that missing piece, has identified a major asset, which effectively is where the fraudster has sunk a lot of his funds. And that's an asset in a jurisdiction I'm fairly comfortable about being able to attack. So it does happen from time to time that that valuable piece of information comes out of these inquiries, and that's where it really all leads from.
Yeah, and it shows that, as you say, it's building the picture from all the pieces of information and pulling them together. Well, thank you everyone for participating on all those discussion areas. I think what we've seen is that we feel it would help both sides of those, the customer and the banks, if there was more codification about what their duties are about looking at fraud and financial crime and protecting the customer. Ultimately, we don't want this money to be going to the criminals, and if we can stop it, all the better. Lots of positive news about technology and the efforts banks are making, and it's encouraging that we can see that we all agree about information sharing, but finding a route to do that maybe in small steps would be a good way. I'm going to have a quick open up the Q&A box and see what I can see. Jake, this may come to you, but also just generally, I think, do you think that there is too much pressure is put on compliance teams, which I think you've answered in part, and if so, how can we support them?
Is there too much pressure put on compliance teams? I think it's hugely dependent on the institution you work for and the area. Smaller firms might not have the resources to give to compliance, and they can have a lot of information to go through, and it's very small teams, so that can be hugely difficult for people in compliance. It's also the volume of information. I think that technology is really, really useful in this regard when it comes to supporting compliance. There's also information sharing and communication, but technology, and I would say training as well. Knowing what to look for, knowing your responsibilities and your regulatory responsibilities, and to the customer and to the firm. it's hugely important, as well as clarity on kind of what it is that you need to do. So there are challenges, but there's plenty that can be done to improve it.
And just on that point of support for compliance teams, do you think compliance teams have enough forums within their own homes, their employers, to voice how they feel they can be supported more?
I think it depends on the institution again, but you get, when you speak to people in compliance, you get very different pictures depending on where it is they're working and in what area. Obviously, that's been one of the perennial kind of concerns for people in compliance is kind of disseminating their message and not being seen as the business prevention units as they might have done 10 years ago. I think that's completely changed. There's still areas for improvement, but the perception of compliance is enormously different from, say, a decade ago. So progress is definitely being made.
Aaron, if I may,
Please, yeah.
Completely agree with Jake, where there's an economic incentive for the best firms that are doing this are not looking at compliance, but are kind of looking at a broader, holistic, know your customer strategy as a revenue accretive approach, right? So if we could bring it back to the economics, not just the compliance to the law, but if you do this well, those who are doing this process well, who are avoiding fraud and then actually using, for example, their KYC and customer diligence processes to better understand, better segment, and ultimately better serve their customer, those are the institutions that are winning in banking. Those are the institutions where you would see unicorns in fintech, right, who are really focused on the customer experience. It's about getting to yes faster rather than sorting through the gray area. To do that, training helps. Great rock stars in compliance helps. Technology and data and automation need to save the day, right? There's just so much to do that's where that path is. But I would say there's an economic incentive to getting this right, where it's not just fear of enforcement, but there's actually a positive nature of having compliance and KYC become part of that proactive business approach to better understand your customer. And there's so many other examples of that in other industries where e-commerce, for example, uses that to its advantage to better serve its customers. I think financial institutions have that same opportunity in the next few years.
Yeah, I think that's a good point. I remember, Jake, you'll know David Jackman, who works with the ICA, and I remember David doing a talk, and he talked about this concept of corporate maturity and not trying to prevent financial crime so to avoid the fine, but you just want to try and avoid the crime taking place. It was a little rhyme at the time and it worked. It stuck in my head for the last 6-7 years. Another question I have here is, with banking frauds increasing almost 67% between 2015 to now, how important is ring fencing and what can be done to shorten the turnaround between fraud detection, analysis, prevention and control? Anyone?
Well, I'd say I would offer it's an interesting question that we see the reporting of fraud increasing. Is there more fraud? I don't know. Is there better identification of that fraud? Absolutely, right? And so I think that those are some of the aspects where maybe that is proving that the work done on the front lines in order to safeguard us is actually improving. I'd say it's an interesting question. It's a great question, but with that information, I look at other signals that are helpful in terms of predicting fraud. And when I think about, for example, we mentioned adverse media, having global media coverage that looks at upticks in certain types of offenses and actually putting better controls in place to identify that. Well, that's all helpful in terms of that identification, because if it's not being identified, we don't know that it's an issue to address at all.
Okay. Jonathan, could I just ask, just from that point, over your career, do you feel that you're seeing more fraud and financial crime issues being disputed, being dealt with, coming to the fore, or is it actually looking back, you think, well, no, this has always been an issue for society. We're just talking about it more.
Well, it certainly has always been an issue for society. I mean, if you go back to biblical days, the Bible's replete with prohibitions against frauds. But plainly, in 7,000 BCE or whatever, they were having problems with fraud. And so I think that's clear. Do you know, I actually think over, I won't reveal how lengthy the span is of my career, but you know, in a way, I'm sorry to give you a disappointing answer. I mean, I'm sure fraud's out there and big time. I mean, we all know it is. But you know, I see the sharp end of the enforcement side. And I mean, it's not really a good picture, to be honest. I mean, the constabulary is a pretty rundown when it comes to fraud. Action fraud in London has been a complete disaster, I think, from what I can see, and it's being redone and reconfigured. City of London police are industrious. The SLO is underfunded. They're bringing a fraction of the number of cases they brought 20 years ago when they kicked off. I mean, actually, the revenue is not prosecuting carousel frauds in the way that it used to, and has been talking about going down the civil route, but actually hasn't really been doing, I don't think, terribly much in that area, certainly not on the criminal side. I mean, in terms of enforcement, I don't think we are seeing it. I think there's a major resource problem. I think the authorities are strapped. I mean, I don't think they're a fraction of what they were. I mean, that's certainly true of the revenue. I mean, it's all very well. I criticize the revenue for not bringing more cases. I'm not sure how they're supposed to. I think their manpower has been cut from 100,000 to 60,000 or something. I mean, it's very difficult. And so I'm not going to say to you that fraud, there's a lower incidence of fraud. I don't think that would be right. But from everything we know and everything we read about in the media, but in terms of actual number of cases coming through, I don't know. You'd need to do some proper research to give you an answer that is meaningful. But my experience from just looking across the piece is that I would have expected us to be seeing more fraud cases coming through the courts, and I don't think we're seeing that.
Interesting. It's interesting, isn't it? Because I think the perspective from maybe the public is that there's much more, and I think crime, the percentage of fraud relating to the overall crime in the UK is about 40% of all crime is fraud. I think there was just one more question that's popped up, and we've just got time to see if I can make it through. It's just seemingly disappeared. Okay, well, we'll go to, I remember what it was now. I think the answer is no to this, but they've said, do we think there is now more, or in the last, say, 10 years, more fraud by employees of banks or less? It was pretty much a black and white question of that nature. And my impression from the work I've dealt with is I think there is less because of the technology in place and our alertness to fraud, and that's from banks at the front end. So has anyone got any comments on that before I bring this all to a close?
Aaron, I agree. I think, you know, not being in that chair, but I think the expectation is that things like chat and sentiment analysis are around and are being used within our internal communication. Now, there are certainly public events and issues that spotlight that internal fraud, but I think the expectation of most employees is that the technology exists. As we kind of left the office, so to speak, and became virtual and much of our working, even more of our communication and our dealings are being tracked through the technology. It makes it almost easier to detect that, or maybe at least it's providing more transparency. So I tend to side with you on that. I think there's an expectation that there are things in place and that risk mitigations in place, that financial institutions have taken this incredibly seriously and work to address this from the inside out.
Yeah, I think that's the impression I've taken as well. Well, we're coming right up to the close at 2 o'clock. It just leaves me to thank our panelists for giving up their time and giving some really valuable insight. I'm very grateful to all of you to help with and support the Chartered Bankers event today. I think all of you can be contacted at your places of work. I think your biographies were available for this event, so please do reach out to any of the panelists if you've got any further questions. They're very friendly people, as you can see. I'd like to also thank all the participants who've attended today's session. We're really grateful for you giving up your time to hear what we think and about these subject areas. And we hope there's something along today's talk that you've taken away and it's been of value. So that brings this session to a close. Thank you from me and thank you from our panelists, and wishing everyone a good rest of their week. Thank you very much.
Thank you.
Thank you.
Yeah.
Good, all the best.